Thanks, Chrissy. It's good to know that no one's identified a real fetish. But I also warn you that I do break IT. Anyone that works around me knows that that's what happens, so here's good luck. In contrast to most folks today, our disclaimer, buyer beware stuff is all at the back. No one seems to leave any time for you to read it anyhow, so it may as well be at the back. Our presentation will be on the ASX website and Sacgasco's websites if you want to follow up at a later time, or come over to the booth and see me later. It's great to see so many of us here today, and so many believers that oil is indeed good oil. I went to a hydrogen presentation on Monday night where it was almost like a revivalist meeting, and there were people bowing to when Alana McTernan was talking about the plans for hydrogen in the state. Hopefully you'll be doing that about Sacgasco by the end of my talk. We need oil and gas for much more than energy. And I'm not the only one who believes the world will be relying on oil and gas for energy and the myriad products created from oil and gas for decades to come. And our industry is not exploring sufficiently to find enough oil and gas to keep up with future demand. So it's a great time to be investing in oil and gas. That's a little bit of background on the company. We're still a minnow with a market cap of just 18 million, but we have assets and people, including our many supporters and associates, to grow into a more substantial beast over the next year or so. And the management have 8% or so of the company, so we're vested in that journey along with you as investors. So what is our mission? We're into oil and natural gases, and that does include helium and hydrogen. And our strategy is a simple one: to acquire oil and gas assets. We look for underexplored and recently overlooked areas where such assets are undervalued. On principle, we run the company on the smell of an oily rag and always seek to put as much of the bulk of the shareholders' funds into the ground to explore for oil and gas. You will have noticed, as I said earlier on, that our strategy in terms of natural gases, it does include helium and hydrogen, but hydrogen in the right form and in the right place. And I have more of an interest in hydrogen in its natural state rather than its manufactured state. What are our foundations for growth? The map on the right shows where our assets are at the moment. 12 months ago, we were a one-asset company in Northern California. Now we are Circum-Pacific. And don't be surprised if this map is not big enough for us in the near future, as we're on the hunt globally for assets that meet our strategy. And we believe there'll be many of those come to us over the next short while. The wheel of growth on the left is one that I've used for decades, and I think it's a good way of looking at the industry. We're all interdependent. We need production, we need shareholders' funds, sometimes we need debt. We're debt adverse in Sacgasco, but it's all integrated, so we have to make the whole story work. And we acquire production for exploration, because we believe that that's where we'll get the biggest bang for our buck and our real growth as a company. Now, I'll repeat that in case you didn't catch it. In our world, production underpins exploration for prospects and exploration drilling as the secret to real growth. The strategy and our foundations for growth, I've put a table in here. I don't intend to go through it, but it looks at our locations for our assets, looks at the value opportunity, the rationale, and the undersupplied energy markets that we're seeking to satisfy. And each of them has a specific need, very close by to the asset. And our new targets are based on the fact, and I say that confidently, that the world is going to need oil and gas, along with some hydrogen and helium for decades into the future. We love all our assets. I love oil and gas, thanks to Kalima. We believe there's a lot of upside in our assets for Sacgasco and its shareholders, and they all fit together. And we're not overly concerned whether we operate or not, because we've chosen assets with our operators whose approach is aligned with ours. And we aim to help each other to grow, rather than get into joint venture stoushes, because that's counterproductive. And we also aim to help people in the areas and countries where we operate to have a better life from involvement with us and reaping benefits from our operations. So we'll just go through the 3 asset areas just quickly and just touch on what we see there. There's more detail on the slides to have a look at later if you're interested. So we'll start with our newest area, the Philippines, more precisely the offshore Palawan Basin. Whilst we acquired these assets only 2 months ago, we've already begun implementing our plans. We have increased our interests. Earlier this week we announced a significant increase in interest in one of the permit areas, the SC54. And we've also discussed and concluded an oil offtake agreement with Bangchak in Thailand. We are seeking early cash flow from the existing discoveries in our string of pearls. We have one too, Ken. And we are seeking to use extended production testing and other honeybee type efficient operations and production methods to get to early cash flow. We've begun an independent review of reserves and resources and look forward to releasing those in the near future. There is underutilised infrastructure in the Philippines. There's a gas pipeline out to Malampaya that is significantly underutilised right now, and there's more gas needed to keep the lights on in Manila. And so we're not looking just for oil, we'll look for gas as well. And the government has a plan clearly enunciated to grow oil and gas and increase oil and gas exploration and hopefully production out of that. So a supportive government and a good contract. Service and equipment providers are already working closely with us to move ahead on our plans, and we've been really encouraged by the enthusiasm that those providers have come to us with. Like our logo, the peregrine falcon, which happens to be the fastest living creature on Earth, we're in a hurry, and we're looking for willing partners for our team. So come and see me afterwards if you're one of those. This is just a bit of a closer look at the asset that we increased our interest in on Monday, Service Contract 54A. The slide illustrates the potential of the contract area. Have a closer look at the flow rates at the bottom of the chart. You see they're very, very significant and very attractive. While our expectations of those string of pearls may be modest in size, the exploration potential in here is very exciting. And mostly it's in shallow water, so it's easy, we believe, to develop using the honeybee concept for early production and ongoing production. In Canada, value attracted us to Canada last year when the industry seemed to be having an apoplexy over one day of negative traded oil price and the fact that we're only consuming 90 million barrels a day of oil in the middle of a global pandemic. We all know that in hindsight, the oil price recovered to a healthy $70 or so per barrel today, and we're back to closer if not in excess of 100 million barrels a day of oil production, or consumption, sorry. And have anyone noticed, if you look at the statistics, that our industry haven't found close to 1 year's production in any 1 year for over a decade? We may well be seeking to reduce consumption if we're not able to afford oil and gas in the future as a result, because we're not replacing the consumption. Like the links that you saw on the icy road in an earlier slide, we went on the prowl and found good prey, and we're still hunting for more oil and gas assets in Canada. There's plenty of upside for production for improved undeveloped PUDs, and there is still plenty of exploration potential in the area. It is underexplored. We did get a hint of helium in our lease areas, and we used modern multispectral satellite data to define some targets. We've also accessed a database of wells that has recorded helium in oil and gas production tests in the past. And we have wells in our area with 3% or more helium. So we'll be chasing after that. Helium above 1% is commercially interesting, and we are in early days in this aspect of our business at this point in time, but our interest is peaked. Interestingly, there is also research in Canada into repurposing abandoned oil wells for hydrogen production. That's a better outcome than plugging and abandoning those wells. But again, that's early days, and we'll be following that potential with interest. So overall, Canada's been a great asset acquisition for us. It's cash flowing nicely. You can see $23 Aussie a barrel of oil equivalent operating margin. We're doing around 450 barrels of oil equivalent per day, 98% oil. And it's going to be a good asset for us, and we expect to improve on that production and on those margins over time. And I'm an oil bull, so I expect the oil price is going to go up and make that more attractive as well. And we are very, very infrastructure rich in those assets. And our partner and operator, Blue Sky, who we've known for years and worked with for years around the world, has very, very much aligned philosophy to ours. And lastly, on our asset review, California. We still love our California assets a lot and are actively pursuing ways to monetize the Borba gas that we discovered earlier and to increase our gas production. It is a premium market and the sixth largest economy in the world as a state. We've drilled two of the most important wells drilled in the Sacramento Basin in the last 30 years. They were admittedly somewhat disappointing in their outcomes, but they've helped us to focus on future prospects for drilling. Our newly acquired proprietary geophysical data has revealed many areas of interest and is being targeted in unique ways, integrated in unique ways into our database. I believe that geology is very attractive also for potential natural hydrogen, similar to the hydrogen discovery in Mali. While California has high aspirations to run their massive economy on renewables, it's salutary to observe the recent decision, noted on the slide, to build 4 new emergency gas-fired power stations to keep the lights on. California consumes more natural gas each day than the whole of Australia. It has to import 90% of that, but still is massively underexplored and overlooked. So it's a good hunting ground in my experience. And natural gas prices in California are over $6 US per MCF this morning. That's over $8 a gigajoule in our terms. So just if I can have 1 minute more, why would you buy shares? I'm not the only one. On fundamentals such as the usual value of proven and probable reserves, we're undervalued. On a value per BOE, we're undervalued versus our peers on the ASX. There are plenty of near-term value catalysts listed on the slide, and there's plenty of valuable exploration upside in all our areas. We've grown, but we've not lost our nimbleness or nose for a good deal. And we're hungry to get on with it. The critters that you've heard about or seen in this presentation sum up our journey. We want to move with the speed of the peregrine. We want to get on the hunt like the lynx. And SGC wants to emulate the productivity of the honeybee. So what's stopping you from joining us? Just remember the ASX ticker SGC. Thank you.